Hi there, Evan here with Crypto and Markets for Wednesday, June 6th, 2018. Remember the beginning of the year, how the consensus was this global growth narrative, which then morphed into the short volatility complex, as I've mentioned a couple of times here on this channel. Short the S&P VIX, short the US dollar, long the euro, long commodities. Well, as the stock market correction happened late January into early February, that trade became unwound everywhere, bar commodities. But if you've been paying attention the last couple of days, it looks like that trade's starting to be put back on again. It looks like the global growth narrative consensus has come back as well. Now first, let's go over the short volatility complex. S&P VIX futures. Traders are now net short again. That's the first thing. Second thing, the US dollar. As I accurately predicted on here roughly about 2 months ago, the US dollar has started to work its way back higher again. But if you look at the cumulative money flows, again, a better indicator of consensus within a currency, not the futures market, that still shows people are still net short the US dollar. Now again, every currency is different. And we've seen this with the emerging market currencies, which have been affected by all the US dollar denominated debt they have, and the strong US dollar taking spending power out of their middle class and starting to affect growth. We've seen that in Brazil. We're starting to see that now in India, etc. Again, I do have a previous video that covers all that in relation especially to the price of oil. If you look at product demand in emerging markets in China and India, that's starting to slow down as well too because of this effect. Again, I have a previous video on this from roughly about a month ago. I'll link it down below so everyone can watch. So there's the US dollar aspect. The euro. Again, not as much as before, but people are still long the euro even after the decline it's had lately. And commodities, again, not as much as before, but the consensus is to be long commodities. And speaking of that commodities part, one thing I wanted to clear up here. There seems to be a consensus growing that trade wars are actually good for commodities. Again, look at every single past trade war. It's not good for commodity demand, hence price. You can go look this up for yourself. Every time there's been a trade war, it's hurt commodity demand and hurt prices. Another narrative I heard with commodities lately as well is that the price of copper, the upward move it's had lately, yes, I've done previous videos about copper's link to the Chinese credit impulse. Again, I still believe in that, but here's what I'll say to that. It's not because of demand. It's because of supply. There was a mine shut down permanently in southern India last week. I'll link an article to that down below. And the workers at the Escondida mine, the BHP's mine, the Escondida mine in Chile, have announced an intention they wish to strike and have given BHP 10 days to respond. Again, for more information, I'll link that down below also. But the moral of the story is, it's about supply, it's not about demand. And again, that narrative has gone into iron ore and zinc as well too the last couple of days. But again, as far as it pertains to the global growth narrative, demand isn't there. So go ahead and wrap this up. The global growth narrative, the short volatility complex. It seems to be guns a-blazing again. But as they got hurt in January, those traders are going to get hurt again. The like button, leave a comment down below, subscribe, and most importantly, follow me on Twitter at CryptoMarkets2. Y'all have a good day.